So welcome back to another business cycle risk score, this time as at March 2020. I will say before I get into it, of course, this one is going to be a little bit different. As I sit here recording this on March 19th, 2020, of course, COVID-19 has gripped the planet, and quite frankly, I don't think anybody really knows what the impact will be from a social standpoint, from an economic standpoint, or any other standpoint really. I think this is a pretty unprecedented event. It certainly has shaken the markets, and I will be kind of walking through not only what the data is showing me, but how I'm going to be looking at investing in the near term here and what my expectations are for the broader business cycle. If you are new to my channel, my name is Jared Ayers. I'm a CFA charter holder. I've been investing my own money for 20 years, and I've created this little channel to share with anyone who's interested the strategies, thought processes, and techniques I use to invest in the markets. So I hope you enjoy. So before we jump into the details, I want to just highlight also, as in previous videos, that I have created a video series where I kind of go through in detail all the steps that I need to go through in order to create the analysis that you're about to see. In this video, I'm just going to be skimming the tops of the waves as usual, picking out the key points. But if you do want to create something similar for yourself, then I will provide a link in the description below for you to access, so you can kind of see exactly how I build this whole set of data up and how I analyze it and look at it. So without further ado, let's jump into what the data is showing us today. So like I mentioned, jumping into the analysis here, so this is the risk score calculation as at March 2020. You can see the score right now is 3.6. Just a quick recap on how I build this up for those who might be seeing this for the first time. I have 13 indicators listed here on the far left. They then get a predictive power allocation, either leading or lagging. Then that turns into a predictive power weighting, either 100% or 50% depending on the allocation. I put a date stamp on the data so I know how old it is. That then also gives me a time weighting, so the older the data, the less of a weighting it gets. That then gives me a total weight, and then I go ahead and look at the data. Understand first of all which direction the data is moving in, and then also whether there's a change in the data or what the rate of change actually is in the data, which is a more important aspect of my analysis. I then get a score, basically +3 to -3, and then I convert that score to a 10-point scale to get the total risk score. So right now 3.6, I believe that was about the same as the January score. I didn't do a video for February, but if I had, you would see that it was a score of 5.8, so it actually came up quite a bit in February versus January, and that really was down to some improvements in the labor area over January, and some strong leading economic indication and some confidence numbers there. But certainly here in March, we've kind of come back down. And really, one of the big changes I found looking at January and looking at February was that the consumer confidence, retail sales, and employment areas were relatively strong still. Now, those typically are the last to go in my experience and looking at this analysis over time. And so what we're seeing now, of course, is consumer confidence and retail sales, and even the jobless claims, which is a predecessor for the unemployment rate, starting to roll over. So at this point, you can see a lot of the data was still a little bit aged. Only a few data points were actually in March. But most were from February and then even older than that. So what I'm expecting to see in the coming weeks, and certainly when I renew this outlook when we look at April, is that all these sort of leading indicators and the non-manufacturing and business confidence indicators to roll over for sure. Of course, what's going on right now in the greater economy is is going to have an impact. It's going to have a major impact, in my opinion. I mean, when major sporting franchises and leagues shut down, pubs, bars, restaurants, all of that, closures across the board, shops shutting except for the bare necessities, and it's really global right now. That is going to have an impact. There's no doubt. How far and how deep, not sure. The market seems to have priced in what seems to be a big chunk of the risk, but I think it's inevitable that we're going to be heading for a recession here. The data hasn't been super strong in the past few months, and we'll look at that in a couple minutes here, but this is definitely a catalyst to kick it into that recessionary time. And I think when we start hearing the word recession and we start realizing that growth is going to basically turn negative quite quickly, no matter how fast it recovers, I think the markets are going to stay down, maybe even go down further. Not too sure, but certainly from a business cycle standpoint, it's going to be worse before it gets better from an indicator standpoint. So like I said, 5.8 in February, that's just a bit of a blip. And what that then translates, of course, in March here, is a range right around that sort of 2.4 to 3.7. On the high end of that right now, but expecting that to get uglier and lower. But still, I mean, January, and if we look back before that, we've been in the bottom half of this sort of 10-point scale. So it's not been looking great, and I believe it's going to even get worse. So if you look at a little bit of the history here, we see February really being the outlier over the past several months. I mean, August got kind of, was the outlier to the other side of things, but I'm expecting a score in that neighborhood or possibly much worse as we look ahead into April. So I haven't had a ton of my portfolio, for instance, in equities. You can see it just hasn't really stood out as a play to make. I mean, given the indicators and what they've been telling me. So hopefully, you've done the same. I think if you didn't have hedges on, if you weren't prepared for this sell-off, then you probably are too late. I don't think the markets have ever sold off this fast, this steep, and this far. Certainly, in the history that I've looked back to. And I think right now it's a waiting game. I think those that are jumping in might be a little bit too soon. I'm quite frankly happy to be late to that party, because I think, again, it's going to be worse before it gets better. As this COVID-19 issue grips the planet, I don't think we have a good handle on what the impact is going to be. I mean, we've seen what's happened in China, what's happening right now in Europe, and what might be coming for us in North America, and it's not looking great. And I just, I'm happy to sit on the sidelines, wait and see before jumping in. I don't think there's going to be any major awards for being early. Certainly, I'm okay with giving up some of the upside for being late. But happy not to get any more punishment than I've already seen. So, again, these are indicators. They're not set in stone. A lot of this data does lag what's happening. I think this event, though, is a little bit of a black swan insofar as it is an outlier, not something that we've seen certainly in recent history. I've seen it being compared, of course, back to the 1918 Spanish flu, which is maybe a bit of a stretch right now, but we just don't know what's going to happen. So I think right now is a good time to stay cautious. Hopefully you have a lot of dry powder, and I suggest you probably want to keep it dry. I certainly am going to in the near term here. There certainly hasn't been a place to hide as the market sold off. I mean, everything has been tanking. Gold, bonds, commodities, there's just been no place to hide. But I think once the dust settles and things start to come back, there will be opportunities. But I think we have to wait to see, well, in my opinion, really how quickly we go into a recession. I don't think it's a question of if, I think it's when. And we'll have to see what the market's reaction is so far. Certainly there has been government stimulus, possibly not enough, I'm not sure yet, but that's been, I guess, some relief for the markets. But I think once numbers start to come out for earnings in the next quarter or two, and GDP and so on, you're going to really start to see the impact of this. And then it all, I guess, depends on how long it will last. Oil and that whole issue hasn't helped the matters either, with Russia and the Saudis sort of battling over OPEC and prices and quantities and everything else. So there's just a lot on the table right now. I'm not great at predicting anything, so even my prediction about an upcoming recession, I'm more than happy to say up front that I could very well be wrong. I've been wrong before, but I think it's healthy to have a thesis about what might happen so that you can at least be prepared, test your thesis. If you're wrong, then pivot and adjust accordingly. So I hope that was helpful, and of course if you have any comments or questions, then leave those for me at the end of this video. So hopefully you did find that video useful. It's hard to say what's going to happen right now. All I can share is the data that I'm seeing, knowing that it's probably going to get worse before it gets better. At least that's my prediction. And of course, I reserve the right to be wrong, because I've been wrong many times before. But this is pretty unprecedented times we're dealing with right now, and I don't know if anyone knows for certain how it's going to flesh out. So all I can do is let you know what I'm seeing and how I'm thinking about the markets as we go forward here. So if you did like the video, do please give me a thumbs up, hit the like button. If you're new to my channel and you have not yet subscribed, then by all means hit the subscribe button. And if you want to leave any comments or questions in the comment section below, then by all means I'd love to hear from you. And until next time, stay safe, stay healthy, and I'll see you in my next video.